Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So the last week in the markets have been, pretty quiet, except for two times. One occurred a few days ago when President Trump announced that he'd be meeting with President Xi of China, and that the markets started thinking, ooh, maybe the tariff, trade war is gonna, maybe not get so violent, and that maybe they'll come to some sort of a deal. And so the markets reacted pretty favorably to that news. Uh, it's not really news because nothing has really happened yet, but that's what the markets do these days. React violently on speculation. Well, that takes me to the second time of volatility, and that was earlier today. So the experts for the last several days have been trying to predict what the Federal Reserve was going to do with interest rates. And many of those experts said, the Fed needs to be looking to cut rates because the economy needs to be accelerated. And if you lower interest rates, that's supposed to accelerate economic activity. And the reason that they feel that we need additional economic activity is some of these experts think that the economy is just slowing down and headed towards the next recession. So if you watch most of these videos that I do, you know that I don't agree with that position. I mean, it just seems ridiculous to me to have a GDP growth rate of 3.1% and to have people talking about the next recession. That's just never happened in my memory, ever. So I don't give what they're saying a lot of weight. But the Federal Reserve came out today and said, nope, we're not making any interest rate changes. So no increases and no decreases. And then they said something that, again, was contrary to what the experts had been predicting, which was that they'd raise or lower interest rates at some point between now and the end of the year. And the Fed came out and said, no, that's really not our plan. Rate decreases are not something that they're looking to do. And that actually makes us pretty happy because, as we've said before, with the Federal Reserve's job, which is, to try to improve employment, it's to try to maintain a stable currency. And so they don't have a lot of tools that they can use to make that happen. So with interest rates as low as they are, if they started cutting rates, and we actually started having, tough economic times, they would have very few tools to try to accelerate the economy. So we're actually quite happy that they didn't bend to what felt like political and public pressure to reduce interest rates, and instead they're maintaining sort of a neutral interest rate policy. We'd like to see them actually raise interest rates because we don't know of anybody right now, businesses or people, that aren't doing something because interest rates are too high. I mean, imagine, right? You're going to go buy a car, you walk into the dealership, and you negotiate the price, and then they say, well, the interest rate, it was going to be 3.5, and now it's going to be 3.75, and somebody doesn't buy that car. No, that's not how it works. So interest rates where they are right now are not a limiting factor on people's decision-making process for how they're going to spend their money. And the same thing goes for businesses. The interest rates are just not the most important issue that they're looking at when trying to decide whether they should expand or grow in some way. So that caused additional volatility today, and the markets actually seem to like the news that interest rates are not going to be changing, and so the markets jumped up today. Now, these sort of short-term volatility to the upside or the downside is not how you should be making investment decisions. We sort of expected this sort of stuff to happen, and so we've been fully invested for quite a while now because the U.S. economy is super strong and looks like it's going to continue to be strong. So that's how we're managing our clients' money at this time. If anybody has any questions about how they're invested and whether they're appropriately invested for today's volatile economic conditions, feel free to give us a call. We'd be happy to help. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back next week with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.